Hello, good afternoon. I'm Marcos Martinez. Fascinating presentation from Carl earlier about open banking. And we have a panel today. I think we have a group of professionals here who will provide a different perspective on open banking. And the topic is about open banking business models. It's a very broad topic and can mean different things to different people. So to make this a little bit more tangible, I would like to explore components of business models. And there's a strong connection actually with the things that the Bank of the Future will be good at. So before we proceed, can I ask each one of you to introduce yourselves? Start with you, Rob.
Certainly, thank you. Robert Sears, both head of product for BBVA's new digital businesses, and also since September, the head of our open banking initiative. Prior to being at BBVA, which I joined about a year and a half ago, I was running my own consumer fintech startup, which was, I didn't know this at the time, but it was a neobank. You would call it a neobank now. Prior to that, I was at Nokia, where I was the chief architect of the software and services side there. So heavy mobile and then fintech experience prior to this, and now I'm happily at BBVA. So,
thank you. Imran?
Well, I've introduced myself already, but yes, implementation trustee to open banking.
Thank you.
And I'm Sophie Guibaud, so I'm Managing Director Europe for Fidor. It's a company I joined actually 3 years ago. Fidor is first an online bank that was launched back in Germany in 2007. That is based on principle of and built on principles of open APIs, so quite early stage for open banking. And since then, we have developed a new organizations that enables organizations with large audience as well as banks to launch new digital banking services, which is called Fidor Solutions.
Thanks, Sophie. So, as I said earlier, when I talk about core components of a standard business model, comes to my mind a few things. So, what's the open banking strategy? How this will create a business model? What's the customer engagement, product and services? So there are key components I would like to discuss. And I'll be honest with you, I'll be extremely ambitious here and try to cover all of them. I know we have just 45 minutes. So starting with open banking strategy. So this is week 10 since we went live with UK open banking on the 13th of Jan. I know it's early days, but I think the question here, I'll start with you, Imran. Are UK banks transitioning from a compliance mindset to a compete mindset? So from, as you said earlier, to deliver a minimum viable product to embrace the change?
Yes, but it is the very early stages of that. There is no doubt about it that whilst open banking should, in theory, be a straightforward thing to execute, if you're a bank that's got an online channel, or a mobile channel, open banking should be straightforward to do, but it is hard. It's hard to do it in a safe and secure manner and in a way that is consistent with other participants, which is obviously integral to a standard. And so for a long time, the resource correctly needs to be put on the compliance element of it. And if you think about the world as compliance, I think compete and innovate. Actually, it's the compete and innovate pieces that they're only just beginning to move into. You must never forget that, and many of the audience will know this, that in banks at the moment, the best funded business line is the compliance business line. And so that's where all the resource sits, and that's where all the activity happens. And thank goodness for it, because if that weren't the case, then open banking would be very hard to implement. But we are beginning to see now that the basics of the compliance are done. The minimum, I think compliant products is a better term than minimum viable product, but a similar thing, is done. We are beginning to see some of the banks that I deal with on a regular basis begin to think about some of those enhancements to their own business model. What's interesting about that is it's kind of 50-50 as to whether they're doing it in-house or they're doing it via partnerships.
And when you think about the digital strategy of any incumbent bank, how this incorporates the open banking strategy. Are these things different? Are the same thing, Rob?
I think they're very closely related. And one of the things that you need to do is take a step back and think about what you mean by open banking. If it's the sort of open access banking that we're talking about in the case of the UK, that's a very important step forward. And it's very challenging to banks already. If you go beyond that and start thinking about opening up much more of your bank into a platform banking, API-based scenario, much as BBVA is doing, as Fidor is doing, then the problems or the challenges go even deeper, but they're very closely related.
Yeah.
What we're trying to do is make sure that we don't stop our thinking at the information open banking, because what you've done at that point is you have really created a digital version of your existing products and opened some access to that. That's a very important step forward. But where the real innovation occurs is when you have forced, because of this digital effort and because of what you can see coming further, when you forced changes down into the organization so that your people and your policies and your processes and in fact your systems are much more nimble and more flexible, that's when you can start to see real innovation kick in.
Yeah, true. I think it was mentioned earlier in the previous presentation that banks, the CMA9, underestimated the complexity of open banking. There was a lot of hard work last year. I think to add another layer of complexity, there are, I think, 6 standards across Europe and the UK. So, Sophie, from a European perspective, do you see a convergence over time? Do you think these standards may become one, or there's an interest to stay as a separate standards?
I would say that. So first of all, open banking has arrived, yes, like much ahead of everything else that was coming. On the other side, in terms of standards, I mean, like the basic standards are basically the way we use APIs. So I hope it will converge. I think we are not at the stage yet. I think we are at the stage where actually organizations, countries are figuring out like what it will look like. And hopefully what will be the power of it. I think it's a very valid point that Imran is doing, is that people are now focusing on compliance. But even at Fidor, we are focusing on compliance. Even small players that are fully API enabled and open banking friendly are focusing on compliance. It's a big part of what we do. However, it's something that we have been advocating for a very long time, is that yes, open banking is much beyond or open banking in general, like not open banking just UK, but open APIs banking should go much beyond just what regulation says, and basically organizations should grasp the opportunities behind it. And yeah, so on our side, it has been, various new revenue opportunities out of that. So of course, like when we launched in 2010, we just couldn't do everything by ourselves. So by building an open platform where we could connect other third-party partners, it was just a way to focus on what we would do best and partner with other organizations, and all done through APIs. So that was really a way to actually improve the product, and I think it's still valid in an open banking PSD2 context, when we see that now we can do aggregation, use the data, like incumbents can do that and improve the experience. It was also a way to generate new revenues just within the Fidor Bank offering by doing affiliation with fintech companies. And we are now seeing very much in the market that it's coming like the fintech marketplace, and we are actually also offering it in white label for banks, and we see quite a lot of interest in that. But it actually shows that beyond compliance, beyond like the minimum requirements, you can actually go further and generate real revenues opportunities.
Thank you. I think there's a lot of interesting components you mentioned here about open banking strategy. I think I'm interested to hear more about how this will impact customer engagement, products and services. Mm-hmm. But before we go there, just one thing I want to ask about open banking strategy. So do you believe open banking is driving more collaboration amongst banks, starting in the UK. I mean, do we believe open banking will create more industry synergies? An example comes to my mind is processes that each bank does repeatedly, like KYC, for example. So the same customer, 10 different processes. So Imran, I'm interested to hear your views about the collaboration side of things in the future.
I don't know. I mean, one way of, probably the way that I would approach that is by looking at the kind of use cases that open banking can initiate or support, enable, I guess. And, back at the open banking implementation entity, we've got a wall with 75 different use cases on it, and I'm sure there are a few in there that work like that. The stripping inefficiency out of the system is definitely part of the driver. It makes me smile that one of the first users of open banking is actually the bank's own in-house products, other product streams. So I was speaking to one bank, and they said their mortgage teams were very keen to get hold of the information via an API because it meant they could do their affordability checks on their customers just so much easier. And they were using other kind of patched together approaches in the past, but here was an API. So they were consuming their own APIs. So it really is kind of baby steps. Collaboration is not amongst the incumbents is not a good word for me because I essentially report into the Competition and Markets Authority, and we want precisely the opposite. We want more competition. But there are clearly use cases that derive from things like KYC and AML. But we mustn't get ourselves confused. Open banking is not digital identity, and there is certainly nothing about it that enables reliance on the kind of core principles that are part of KYC and AML. But can they facilitate or provide an input into that process? Of course they can.
Absolutely, absolutely. I think as the CMA and open banking drives more competition, I think the end customer will win in the long term. And when you think about how banks relate to customers, they usually own the end-to-end relationship. And one of the words we most listen related to open banking is disintermediation. So open banking will create these divides on how banks interact with their customers. So one question I have is how effectively open banking will impact customer relationships. So how this will change the engagement with your brand. Rob, can you expand on that?
So I can give you my thoughts on that. It's early enough that I would preface it by saying I don't actually know for sure, but I do feel like what we're trying to push for is more engagement with a broader range of people. So in fact, there is a possibility for disintermediation if you think about having a banking platform that can be integrated into other digital experiences, for example. Then the end customer might be a customer of the other digital company that is integrating with your banking capabilities. But that actually gives you a touch point to a consumer that you might not have seen before. So there is while there's a danger of being disintermediated, there's actually also a really big opportunity to be able to extend your reach out and to touch more users. So that's what we're trying to focus on. I do think in that context, though, that drives the importance of your brand tremendously. When you have a direct relationship with consumers, they know your brand. And one of the things you have to strive for is to be a trusted brand, obviously. As you look at a situation where the users might be interacting with a different brand and then touching you through that other brand, you have to really think hard about how you position yourself and the kinds of, even down to the kinds of agreements you strike with that digital partner, such that the consumers can then come in and see your brand at the right time. So some of the payment companies like PayPal, it's a great example, right? Where you go to a checkout, you have your choice of credit cards or direct from account, and then PayPal. If they had not concentrated on getting their brand out there in that sort of almost disintermediated position, they would be in a much worse scenario. So that's something you have to really think about hard is, can you expand your reach to more users? And in this new world, how do you preserve your brand and extend it out?
Got it. And if you put yourself on the customer's shoes, so how how can banks understand or try to interpret the customer's expectations? So we had this conversation a few weeks ago, Sophie, about asking customers what they want and design a product that they are really looking for. So can you expand on that, on this example from Fidor?
Yeah, absolutely. So, I mean, Fidor was built on the principle that we are a community bank. So basically, since very early on, we have created a community where people can actually interact between each other around personal finance topics. So that's one part. We don't have advisor and they help each other on that. But most importantly, we are actually leveraging the community for them to help us co-build the product they want. So I can give you actually a couple examples for when I launched Fidor Bank in the UK. So when we launched in the UK, I did two things. So the first of all, of course, I was in charge of my P&L and I wanted to generate revenues, but in the UK, a bit challenging when you don't have that many products as a MVP. And one of my main cost driver was the cards, of course, because we don't have any ATM networks. So I went in the community and discussed with them like what would be acceptable actually in terms of pricing of cards. And like one of the main pain points was clearly the ATM fees. And what I made as a proposition as part like to the community was actually we will need to charge for the ATMs, not from the first one, but my proposal to you is that the fourth one you will need to actually pay. But the first free one you can do anywhere in the world and it's going to be for free. Which is a bit different values than you could see on the market, because when you go abroad, most of the time you have to pay for actually ATMs. At least it was the case 3 years ago. And actually, the community members got back to me and say, okay, like we are not super happy with that, but we understand. But what does happen when we do actually cash back at the supermarket? And actually, it was perfect for us because it was increasing our interchange revenue by increasing the minimum, the amount at the supermarket, and it was helping the customers. So this is like an example of something that has been brought by a community member that was actually shared to customer service and that was shared around clients. So we have used this kind of tools. Like for example, this was something we have done in the UK and Germany. Also, it's negotiating the interest rates with our customers. So really, we have used this platform to really be able to iterate on what we do and also consult on what makes sense.
Got it. And when you think about the customer expectations and when you mention open banking, given we are in the early days of open banking in the UK, so there's a question if the industry is ready to engage the customer, if the customer understands the benefits of open banking. We just, on the previous presentation, Carl mentioned we are waiting to see a killer app. So just interested to hear your thoughts, Imran, from a CMA9 perspective. So what are the next steps to engage the customer?
I don't think the customers need to know any more about open banking than they know about SWIFT, faster payments, BACS, or how HTTPS works. I mean, it is a piece of, it's an overlay service, but the point is that on this overlay service are built lots of other apps and so on, or fintech propositions. We don't think that it's our job to promote open banking amongst consumers. We think that those innovators, be it fintechs or other banks or non-financial services players, they will figure out what their use case is. They'll build a proposition, they'll take it to market, and they'll promote it. What it is, our job is to make sure that we are a central repository of trusted information. So if consumers want to find out how this stuff works, and they in the early days they will do, because it is complicated, they can come to us and we'll help them understand. And some of the important messaging around, if you're using an API, you never have to share your username and password. It's an opt-in, it's not an opt-out. You can revoke your permissions at any point in time. There has to be a dashboard. You have rights that are going to be protected for you that are underpinned by the FOS. All of these things are super important, and we will ensure that if customers want to know more about it, they can come to us to understand it. But I think it's the job of the innovators who want to make use of this to really bring it to market. And the early indications are really exciting, because you must never forget, in the UK, the open banking in some shape or form has been going on for many years, as in the case in Northern Europe. In Northern Europe, it was screen scraping to execute payments. In the UK, it was screen scraping in order to do account aggregation. So there are millions of consumers out there who already find so much value in this proposition that they're willing to give up their username and password to make it happen. They now no longer need to give up their username and password to make it happen. So there's already a bunch of business models that are going to be engaged, and you can see what they are. The question is what happens next? That's where it gets really interesting.
Absolutely. I think the beauty of this new infrastructure is all this flexibility that enables fragmenting the value chain and allowing third parties to engage. One of the things we discussed earlier, I think on the previous panel, was around the integration with the customer lifestyle. I think there are interesting examples from the BVA, actually. So how banks can provide a more contextually relevant experience for customers. So how you see that?
So there are a couple of things, actually. The previous comments lead right up to this. As you look at the evolution of customer expectations, they're a bit ahead of where the industry is, of course, but things like the open banking initiatives help bring the banking industry up to the point where it can better serve those needs. You need to be very aware of the customer's expectations in the rest of their life. So as they're interacting with other digital properties, other digital apps, there's sort of a timer in people's heads. They expect responses to be fast. They expect when they try to execute something, it's going to happen for them in near real time. They want upgrades of the app and the software to happen on a reasonable time scale. Most of the apps out there push out an upgrade every 2 weeks to a month, something like that. So if you're stuck upgrading once a year, you're in the Stone Age. So those kinds of expectations are really critical. Then the interaction expectations, though, to go back to the comments before, they expect a very reactive interaction. And actually, these days, we're beginning to see that consumers want systems that will reach out to them at the right time. Push notifications and things are just the very beginning of that. That's been around for a long time. And in fact, not done properly, those are incredibly irritating. So one of the things we're trying to do is we're trying to look and see how can we best learn how to interact with the consumers. So give them what they need when they reach out to us, make that very responsive, make it easy to get to, make it respond very, very quickly. And then also take it another step to one of the things we discussed over the phone recently was cognitive user experience, where you actually learn from the consumer's behavior and you learn from all that you know about them, and you try to reach out to them appropriately through the right channels, the right way, at the right times, to help them understand maybe things that they could do, actions they could take. Sort of in the same way that when you're at a really good hotel, you have a concierge that knows how to, say the right thing to you and goes back and does work on your behalf and then comes back and tells you something. Those are the sorts of interactions that are really priceless to consumers when you have thought through your product well enough and put the effort in to understand the consumers and what they need, and then you know how to contact them at the right time in the right way. That's invaluable.
Got it. I think the next thing to consider is open banking will, basically the business implication for banks is that open banking is effectively decoupling production and distribution. And that creates some interesting dynamics. So from your experience with the 9 biggest banks in the UK, Imran, so do you think there will be a spectrum of choices that each bank will make towards distribution, towards production? Doesn't really matter. They will stay in the center. So how banks are coping with this new fragmented value chain, if you like?
I still struggle with the distinction between distribution and manufacturing. I think, if anything, open banking actually blurs that very distinction itself, because the idea, of distribution manufacturing is almost like a vertical supply chain, where you've got the kind of the factory at one end has got raw materials that come in. It kind of figures out what product it's going to build. It's going to build it at scale. It's going to be meet all sorts of QA requirements, and then it's the job of distribution to push it into the market. I think open banking changes that entire dynamic. It is much more about what does the customer need, and you'll find it in a far more fragmented way, and actually you'll find that the product is continuously getting tweaked and changed and amended. And that nimbleness is the hardest thing for many of these large banks to embrace, which I think is why in the early stage some of them are experimenting with working with fintechs and almost, in some cases, giving them the keys to open banking and say, you figure it out and then we'll scale it up.
Right. So just thinking about the last 12 months in the UK, the center of open banking was current accounts, personal and current accounts. And I think we have seen different approaches. Some banks, or most of the banks, adapting the product to this new digital channel. And there's a question if banks should not only adapt but rethink the whole product for this new digital channel. So this is something that Sophie, I'd like to hear views from your experience with FIDO.
Yeah. So basically, so what we do, with solutions, is that we really enable organizations like banks to answer this specific topic by enabling them to launch new digital banking services, but that are separate from what they do currently, and that actually help them test out new propositions on the market quite fast, target new target segments, also target new geographies, but in terms of open banking, it's a bit less relevant. So I think it's about really starting small and really experimenting, and you have ways to do that. You have ways like with a provider such as us, but also by just creating separate streams internally and really focusing on a niche segment and answering their specific needs. And I think it's what has been driving really the growth of a lot of fintech companies and actually neobanks, is that if you look at them, a lot of them have been focusing on answering the needs of specific markets. And we can think of, for example, Monies with the expats, Osper that was super early on with the children, etc. And this is the reason why those propositions have been so relevant, is because taking a specific target market, answering those needs in a digital capacity and adapting it, yes, to what those people want. Because it's very difficult to actually do one proposition fit all. And I don't think it's where we are heading towards, because now we have so much choice that we can actually pick and choose what is good for us, which means that something generic is maybe not the solution.
Yeah, and it's impossible to talk about tailoring the product proposition without talking about data. So if you consider this new environment, open banking, so most products and services were based on the data that the customer provides. So in the light of recent events involving Facebook and Cambridge Analytica, so do you believe banks have a role to play on how to educate customers, how to use it? What's your views on that, Rob?
So a couple things. I think one of the things that if you take a really hard look at current banking products, a lot of those are based, in fact, not as much on the data as we'd like. They're based on historical products, and they've just been brought into the digital age with digital user interfaces. Going forward, designing products based on consumer data and customer data, consumer and business, is going to be very critically important. And yes, given the breaches at Equifax, given the various scandals with digital companies, consumers are much more aware of their own data, the value of their data, the need to protect it, so the ability to actually give access to your data without giving away your username and password, that's huge, that's critically important. I think banks have a role in this, not only for education, that's important, but also we're regarded as trusted stewards and custodians of money. With data having the kind of value that money has now, we need to be looking at roles for being more involved in the handling of people's data on a day-to-day basis, maybe as a steward of their data as well. At the very least, we have to make sure that we are the most trusted partner for handling your data.
Yeah. And to offer the best service going forward, it's unlikely that banks will do that by themselves. So we are seeing a lot of partnerships being formed. But there's a range of options to consider when you partner. So you could invest as a bank in a new idea, in a new startup.
Yeah, we actually did exactly that internally at BBVA on data protection. We have a startup that's coming out of the new digital businesses called Covault, which gives you as a consumer control over encrypted information. So you scan in your passport, your driver's license. These are then authenticated via external services and our own internal services. And then you use a consumer that is stored encrypted. The keys are kept on your phone. We can't actually see the data. It's not possible for us to unencrypt it ourselves. And then you as a consumer are allowed to say who gets to use your data and when. So it's the very first step forward towards the ability, our ability as a bank, to offer controlled data access where you, the data owner, actually get to say what happens to it.
So that's an interesting example where the bank, BBVA, is acquiring a new capability based on a partnership. So how you decide how serious this engagement needs to be in the long term? Because you could invest, partner, and in the other end of the spectrum, you could choose to acquire the business. So how you make this decision over time?
It's really hard, and it's sort of on a case-by-case basis. So Covault was created internally. We have a number of partnerships. We're actually, proudly an investor in Adam Bank here in the UK. And so that is indicative of a situation where we looked at it and we said, we don't know exactly ourselves how we would perhaps set up a cutting-edge digital bank in the UK, but we know we want to know what's going on, we want to learn. And we weren't ready to jump in and do a full-on acquisition, so we invested. And we have a number of situations around the globe where we've taken that approach, but you have to look at it on a case-by-case basis and think about, is it something that we can do internally? There's a limit on what you can do internally because of the inertia you have. Is it something where we actually know we want to own it outright and it's such a property that we think we could own it without killing it? That's also very difficult, right? It's pretty common for large companies to buy something, hope to keep it, and then smother it. That's pretty common. So you have to be really careful. And in between is invest and learn. So the only answer I have for you is it is a case-by-case basis depending on what you're trying to go into and what you're trying to learn.
So one of the things was mentioned before, one of the key things that the bank of the future will be good at is they'll be able to decide when to collaborate and when to compete. So working with a broader range of fintechs or TPPs, what kind of challenges this create? Because you don't want to share all your customer data, right? You don't want to provide information that it's not really relevant to that commercial arrangement. So how you balance this? So for them.
Yeah. Well, I mean, we share the minimum data that is required to operate, right? So yeah, we haven't taken the approach of acquisition or anything like that. With like our open platform, it has always been about partnership. So it has been either by partnership in white label for example, KYC provider, etc., because there is really no point in not it being white labeled, disrupt just the customer experience. But for the other things, such as providing like services, financial services, we have always done it basically in the branding of our partners. And where we have, like our thesis is that basically we wanted to be a one-stop shop for our clients in terms of banking services. We saw all this disintermediation, indeed, like that we see with all those fintechs, etc., and we didn't think it was actually the best experience for the client to go from one app to another and don't see all positions. So this was really the idea behind it. Now we have several levels of integrations with the fintechs. Which are from like very just basic affiliation link to just a bit sharing a bit more data with about our clients, but it's really the data to enable the client to acquire the service. So we are fully transparent in which data is actually shared, and we have no problem in doing that because it's for the benefits of the customer, and on our side it's new revenue opportunities. So it's not as if we were opening like anything that is not required or that is not transparent really.
Here in the UK, over the last 2 months and a half, during this process of soft launch of open banking, one of the things that is happening is banks are budding with specific TPPs to test the journeys, see how it's working. So from your view over the last few months, so what are the challenges and opportunities you see in the interaction between incumbents and fintechs in this new open banking ecosystem?
Yeah, I'll go into that point by actually touching on a couple of the other things that were said, particularly starting with the data piece and the customer element. This kind of, when we designed open banking at the very beginning, and this was done with Treasury and government, it started 5, maybe more years ago, probably more years ago. Well, PSD2 was still far from being in the state it is at the moment. And this fundamental recognition that data is valuable and the data that the bank holds on the customer belongs to the customer and not to the bank was just a truism. And I think what we're seeing, so what we set out to do, which I think is even more valuable and pertinent now given what's going on with Facebook, is that everything we're doing in open banking is about trying to give the control of the data back to the customer. And it makes me as happy when a customer decides not to use open banking as when they do use open banking, because they're making a decision about what their data gets used for, and the minimum amount of data that's required, and precisely what the permission is they're giving for that data to be used for. And these are things that are enshrined in GDPR. And so we're bringing that all together and trying to move away from the world of 120 pages of terms and conditions that are just confusing for customers and making it super simple. What is that company going to do with your data? If they do anything with it that they don't state up front, then effectively it's illegal. It breaks GDPR. And what's the minimum amount of data that's required to do it? And if the customer wants to change their mind and revoke it, it should be very transparent who they've given permissions to, and they should be able to do that. That's all real power to the customer. And I hope and even expect that if we get this right within financial services, where the industry is incredibly good at looking after people's money and can demonstrate then that it's incredibly good at looking after people's data, is actually going to be a trailblazer for other sectors. With regard to the customer relationship, that's also a very interesting dynamic because it comes up in your questions. When an open banking customer gives consent to a fintech or to any other authorized entity, can only be authorized entities, to access their data that's being held at the financial institution, that customer is a customer of the fintech, first and foremost. That's why they're doing it. It's not a customer of a bank that's choosing to share their data with a third party. It's a customer of a fintech that's choosing to share the data which they own with a third party. And once you reorientate yourself around that particular equation, then actually things become an awful lot simpler. And you can see the use cases are far more, and the business models are far more complementary. If you start the other way around, you end up in a world where the fintechs are doing what the banks do, and then every time they show it to the bank will copy what the fintechs does. And then you end up in a situation where they're just trying to, frankly, outcompete each other by doing exactly the same things. If your starting premise is that actually the customer is involved in something that is non-banking, non-financial services maybe, or it's to do with wealth management or insurance or something that is not to do with the current account, then you can see how it plays in and it's utterly complementary to what they do. And then a commercial model can be figured out, can be overlaid on top. The practicalities, which was the final part of your question, of how the fintechs and the banks work together. The last 2 months have been a great learning for us here in the UK, because I think the major difference that we're doing in the UK with the open banking standard versus some of the other standards in Europe is that ours is as much an implementation exercise as it is a standard writing exercise. In fact, in the team that I look after in the open banking implementation entity, less than a quarter really are actually writing standards. It's a small number. The rest of them are doing all the work that's required to ensure those standards are consensual and that they are implemented. And it is very hard to get this implemented, even when you have a standard. Getting a fintech to connect with a bank, there are lots of things that go beyond the standard to give the security protocol, the information flows, response times, and so on. It gets quite technical. And we're doing that all without any legal requirement, any kind of contract or commercial discussions that overlay on top of it. But we'll get better at doing it on the fintech side and on the bank side as well. And I hope that in time, connections will be made, and it will take in the region of 2 hours for a fintech to connect up to a bank.
That's incredible.
There are actually two really incredibly important points that were made here a moment ago. What Imran said about changing your focus from looking at who owns the customer, changing your focus there, and looking at it and saying, well, this is a customer of some entity that's outside the bank, and it could be any kind. It doesn't have to be a fintech. It could be any kind. That's incredibly important, because what we've seen in the fintech innovation so far is not actually all that far removed from what's already been done in financial services. But over the next few years, with the adoption of open banking, I think the innovation we'll see will be tremendous. You'll see a lot of things that are much different from what we've seen before, but are touching back into the financial system through open banking. Also, what Sophie mentioned about being a one-stop shop, that's a point that I really want to bring out as well, because most of the time open banking is thought of in terms of APIs, and APIs are very technical, but there's a side to this that's very important that you highlighted with that comment, which is, in addition to technical APIs, there's a lot of human APIs that are involved to deal with your bank. So if you're a fintech, you need to be able to couple back into Fidor and get access to the compliance capabilities and the knowledge and expertise that go along with having a bank charter. And that's a side that is not really well appreciated. It's a technical exercise, yes, but there's a whole additional side to the open banking efforts that really often is overlooked. Critically important to allow the kind of innovation that we want to see.
When you talk about all these components together, the customers, products and services, strategies, it's very clear that open banking is driving a lot of innovation. However, traditionally, the incumbents culture is risk averse. So what are the sensible steps in the short term to transition the organization from a risk averse culture to a innovative mindset? It's a quite open-ended question, but it's a quite a big contrast.
Well, I'm sitting next to a regulator, so I'm going to be very careful what I say. But really, I think one of the first things you have to do is first you can't say we're going to just release ourselves from our regulatory mindset. That's not workable. In fact, it's not even smart. In addition to the fact that would get you in a lot of trouble, a thorough understanding of what's meant by the regulations is really a competitive advantage. You'll see people out there trying to innovate and not paying attention to that. They're going to get shut down. If you understand why the regulations are there, that's an advantage. But I'd say the starting point that I've found to be the most useful is, it is an iterative process, by the way, but to set up a very open dialogue with the control functions inside your bank, and start working with them to show them what it is that you're trying to do, so that they can have a chance to re-examine their policies and procedures. And in a lot of cases, what you'll find with existing banks, their policies and processes and such were set up for a branch banking environment that was open only a certain number of days, only a certain number of hours a week, and dealt with people on a face-to-face basis in their neighborhoods. When you make a transition to a digital environment where it's 24/7 and you're dealing with people that you probably never meet face-to-face, the expectations and information that you get are different. So you have to work through and step by step with the control functions to make sure that they are actually aware of what you're trying to do and have a chance to rethink what they have already done. It won't happen in one step. You have to do it in an iterative process.
Can you expect a clash of cultures with fintechs? Sorry, are we running out of time? Or?
I just thought I'd do a quick time check, because we're coming to the end of the session. But there's probably time for one question from the audience.
Absolutely,
if you wanted to final question, and then we can continue the discussion over coffee. Is there a question in the audience that somebody wanted to pose? I think there's a question back there.
Hi, Carl Roll, BCS Consulting. I was interested in the respective, competitiveness of the UK versus the rest of Europe. So obviously we've implemented open banking in the UK, and there's a school of thought that says actually, given the UK's focus for so long on compliance, there's actually others stealing a march now in Europe because they haven't had to do that to the extent we have. What do you think to that?
We couldn't hear.
So I don't know who that question was directed to, or can actually the question.
I guess Imran, you might be best placed.
Sure.
If you don't mind.
What was the question?
Repeat the question, Carl.
Please, yeah.
So given the UK has spent so long implementing the open banking standard over the last year or two, there is a school of thought that says others in Europe who have had more time, given the PSD2 timelines are lagging, to focus more on the competitive aspects. So do you think, how do you think the UK's competitiveness is stacking up against the rest of Europe with open banking in mind?
No, there's no doubt in my mind that actually it puts us in the UK in a very strong position, because you have to do the compliance piece first and then you do the innovation afterwards. If you do the innovation first, you're going to trip up over the compliance piece. So the learning that's gone on amongst the 9 largest banks in the UK on how to set up these APIs, how to work them through with real fintechs, how to interface with their own control systems, and how to prepare for scale has just been how to understand the appropriate cyber umbrella that has to sit over the top of it, how to run a sandbox in a live production environment where third parties can come onto. These things are very difficult to do, and you have to do that first, and then you can think about all the innovation that could go on top of it. Otherwise, you'll end up talking a lot about innovation, not doing a great deal, and then have to do the compliance stuff on a shortened time frame. I'm comfortable that the UK experience of going first, and as pioneers, you always take the arrows, but as going first, I think you do learn an awful lot there.
Very good, thank you.
Thank you.
Marcus, did you want to make a final closing comment to end the discussion?
No, I want to I really appreciate your making the time. It was a very interesting conversation. I think 2018 will be a very interesting year for open banking. Thank you.
Okay, thank you very much.
Cheers. Thank you.
Can I have a round of applause for the panel, please?